The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Wednesday the 27th, and what do we have? We have the Dow $50 at 37,594. 37,641 was the high of 5 sessions ago. Will it take it out? See this little doji candle right here from last week in the weekly chart. Is this an old F or is it a brand new A? F says, oh, be careful because we could have quite a pullback. A says, are you kidding? Every single pullback you want to buy. But all the evidence says, look, let's go straight to this weekly chart. The weekly chart says the MACD, the moving average convergence divergence, is really strong. That means the histogram is still expanding. For that green 9-period differential to turn down and close underneath the 26-period exponential moving average, the red one, you would have to see the Dow really slump. Not only that, it is way above at 37,596. It's way above the if I can read the darn thing, 36,194 is the green 9-period moving average. That's 400 points below. And below that at 35,666. Look at this, the black 14-period moving average. To get this green line to go underneath to go pink underneath the 14-period moving average, you would have to see a monster decline. You'd have to see a decline to the 35,000, maybe 34,900s. So as I see it right now, the breakout in the in the Dow and the S&P in their monthly charts, and the Dow is in leg C. In the Chapman methodology, most importantly, you got to keep in mind that, let me just get to it right there, that in the spectrum of the alphabet, A, B, C, D, E, F, G, that's what you count on the way up or the way down in the Chapman methodology, that fourth highest peak, peak D, is your target of a buy signal upgraded to a buy mode. It can go higher, but it goes to at least a D. And that means that at this particular point, you're only in leg C. The brand new buy signal, I've got an up, I should have an up arrow right there, up arrow from the 28,660 low. That was in October. We are still long the Dow from that level. Not only that, well, we got a position in the Dow Diamonds, and we got a more aggressive 3 times long. That's a silly thing to do for long term. It's just not made for long term. But I decided we'd keep it and just see what happens. More, not as an experiment, but more as a way of participating on big moves up so that we can garner some nice gains. But meantime, back at the ranch, this single leg A to the upside, I think it's an A because look, this in the weekly chart, flat stochastic at 98%. The trouble is when you get to 98%, where's the next level when it finally turns down? It can go all the way back to single digits. So that says, yeah, there could be a very sharp pullback, but the way I'm looking at it, you've got tremendous support. You're at 37,600 right now. You have support all in this area. The whole area of 36,500 to 36,000 should be tremendous support. And I've said this for some time. The dark news cloud cover, I don't even know how to gauge it right now. Because, why did that come down? That's never a good sign. It should be up there. I don't know why it does that. There are a lot of things I don't understand about this, but anyway, I'll just deal with it. All right, what we've got is, underneath it, we've got, that's not what I wanted. That's what I wanted. There you are. You see, I'm just lifting up these panels so that they're all in line. Let's just get this one down a little bit lower. There it is. So what I am saying is that this particular yellow, if this is the one that's going to pop up right now, no, that's it. What is this? All right, I don't need that. Wow, a whole bunch of things are happening. And no, don't tell me I've lost it. What is this one? This is the one with the on-balance volume. Yeah, this is the on-balance volume. No, I haven't lost it. It must be there. It must be this one here. There it is. Okay, so this is what I'm looking at. Phew. So I said, I'm going to outline this, but only because on a chart basis, but not on a news basis. There is no dark news. The yields are the lowest they've been in a long time. The crude oil is down in the lower range. So we'd have yields, we'd have dark news. I'm just looking at things that the dollar is down in the doldrums. I just don't see anything. So it's going to be bad news. Maybe it's a geopolitical thing that we're anticipating. But this is where I've said I'm only putting it in background. It's unlike this where I said I see some dark news coming up, and therefore we're going to start looking at the short side. At this particular point, I just have to say, under every other circumstance, with the Dow up 70 right now, at almost an all-time high. Did it go to it's very close to an all-time high. I don't see anything out there. It will happen, but I don't see it at this particular time. And as far as I'm concerned, what would do it? It'll be either crude oil skyrocketing and something happened in the Straits of Hormuz, something like that. But you can go around to where I used to live, Cape Town, South Africa. You can go around the Cape Horn. It takes an extra, 10 days or something. Not a big deal. You can get around there. It's a cumbersome thing, but you can do it. So I don't quite understand what it could be at this particular point. What is out there that's going to be the dark news where the market says, oh, this is horrible, rather than say, we can deal with this. So that's what I'm looking at. And the MACD and the weekly chart is very strong. The stochastic's at 98%. On-balance volume's overbought, but that's okay. It hasn't done anything yet. The 9 is way over the 14-period moving average, and the price is way over the 9. I could almost say the same thing about the monthly chart. And the daily chart is overbought on a purely technical basis based on on-balance volume. But big deal. That says it could pull back, but it doesn't say, oh, that's a major sell signal. MACD has actually started to turn down. It hasn't crossed negative yet. It's very close. Stochastic is now at 86%, lower than it was, but still very strong. I don't know. It's going to be there. And I got a feeling. And one of the things that I say to subscribers is I'm kind of nervous right now. Why? Because we have got a number of long positions. We've increased them over the last couple of days. That always makes me nervous because when I get to a certain point, besides the extra work that it does, it means that, yes, I've got a number of issues that have come right into the buy zone and we've gone long. But at the same time, I don't like to have too many. It just says to me, be careful. This is exactly when you start to see the market deteriorate in the technicals. Hasn't done it yet, but I'm watching it real closely. So let's just do this real quickly. There's the S&P. Hasn't quite made a new recovery high yet. But look at that strong weekly chart with the stochastic at 97.62. And yes, it's in leg D in the monthly chart, but it hasn't taken out the 4818.62 January 2022 high. I'll be back in a moment. Let's just see if we got that little mini sell-off there in that 1 minute chart. Yep, peak, big move down. I'll be back in a moment.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back. I just thought I'd look at UNG, which is the United States Natural Gas. I had a question here. What is it, Basil? Is it time to look at natural gas? Well, it's always time to look at it. It's not always time to do something about it. But this particular instance, see, as I look at it right now, the way natural gas has acted, my suspicion is that when it finally moves to the upside, it's going to be so sudden, so quickly, and so ferociously that it just look at this chart right now. Look at the daily chart. Leg B, this is UNG, this is the United States Natural Gas Fund. This is the fund itself. Here's the natural gas continuous here's the continuous contract right here. Let me just get this out the way. There it is. NG. It's already in the leg C. And I have got an up arrow, meaning that all the technicals are starting to improve enough to say that there should be a leg D. It doesn't tell you how high other techniques do that, but it says that this should be a buy mode. The stochastic is only at 60%. On balance volume is very weak. Relative strength is improved, and the stochastic is improved with the MACD. So all the technicals are starting to improve. The 9-period moving average is still way under the 14. It's got a long way to go. But I suspect that when natural gas actually gets its act together, for whatever reason, and I mean, it's just being ignored. No one even talks about natural gas anymore. But when it does, it's going to have a really big spike. And then the base that's formed in the called the 220s, maybe, let me see, the 218, I can't remember now offhand. 2.135. That's the low of the 13th of December. My suspicion is that if this does work, that it'll get to the 260s, and that's where there'll be a moment of recognition. And does it just stay there for a brief moment and then spike almost a double to the upside, going to the 290, 310 area? Or does it just stall completely and go back into this what it tends to do is to go into the rectangle formation or an arch formation and come back and test the left side low. The way I'm looking at it at this particular point, with the technicals improving, if the 14-period moving average is crossed by that pink 9-period moving average and the pink goes green, I think you've got yourself at least a nice quick move to the high that was made on the 5th of December of 2.686. That's the continuous contract. The UNG comparable would be the high that was made right here. That was on the 5th of December at 5.49. It's trading right now at 5.13, up 20 cents. So, and the UNG is actually, it's not as strong a move as the UNG, as the natural gas itself. It has these big spikes and then it kind of gives it back. And the weekly chart is not quite as good looking. So you really need natural gas to be the trigger for the momentum to actually push not just to the upside, but to just leave this whole area from this little doji candle right here from the 1st of January with a high of, this is the UNG, of 560 and a low of 543. To treat that first as a magnet and then just to push away from it and move as quickly as possible towards the 50-period moving average. And that must be my suspicion that when natural gas eventually gets going, there'll be so much disbelief that it'll get very quickly back into this rectangle with 587 was the low of April, the week of the 27th of April, get back into that rectangle and visit it, and that's going to be the big test. Is this just a break to the upside after an extremely elastic band, rubber band, stretch to the downside, and then it just peters out? Or is this the big move to the upside? I don't think you can really tell, but winter's coming. It is coming. It's stalling here in the Boston area. We've had fantastic weather. But it's coming, believe me. So I'm watching this very closely. We do not have a position in UNG, but it's interesting that we've got a number of the commodities. You know, all I can say is if that's what's given to us, that's what we'll take. And most importantly is that within the context of the commodities, if you look at the dollar, look at this DXY, Louis Pasteur's birthday. I don't know how that popped up. Look, here's the Chapman wave. Let me just move this to the right. Here is your arch, huge arch formation. Here's your Chapman wave inside wedge, target, support line, the pink dashed line. We've gotten to it. We've gotten to the midpoint. Remember, I like, if I can't use it like a little doji candle at a peak D or E, I like to, the cup that forms, that fails, is really the bottom that I like to use as a measurement in my right there, the plumb line from the left side, number of bars to the right side to match. And it did that once when it went down to the 103 level, and then it rallied up to the 200-period moving average, got repelled, and now it's come all the way back, and it's looking ugly today, down 30 ticks at 101.17. The 101s was a target, but the real target has been this line right here. I've decided not to do anything with it just yet, and that's the low, the candle low of the 27th of July of this year at 100.55. But I'm suspecting that if that breaks, then this trend line will break. So the next level will be all the way down here, the double bottom low at 100 at 99. In the 99s, 99.99, 99.80 something. That's the area. So all I can say is that it's starting to find support. If you look at the EUR USD, this is the euro dollar currency pair in leg D, getting to the left side high. That was this high that was right there, the high of the 27th of July of this year, which is 1.1149. And today's high is 1.1109 in leg D right here. It could be an alternate count. I'm just trying to be a little bit more, I'm less aggressive in calling it a D so far. The MACD is good. The stochastics at 91%. The 9 period is over the 14. Everything's very positive. But the Chapman wave inside wedge target repellent zone is right here. So style is dashed. There it is. And we're just on it right. Oops, I'm clicked it by mistake. We're just on it right now. So it says by next week, that's going to be the real test. And then the monthly chart has gone to a peak C at a big pullback, and it's attempting to get to a D, which should take it right to the Chapman Wave inside track repellent zone, and that should take you to 1.147. And if you look at the USD JPY, that is the yen currency pair, made a peak E right there. See, this is a right here. This is a continuous contract, meaning that it gets smoothed out. Therefore, all the notation, nothing here is automated. I do all the hand charting myself. It's gone to a trough F, bounced to the 200-period moving average, pull back, and it's in this consolidation area. And remember, the rule of thumb is in a big, large rectangle that goes from a flag high and straight down. It can make higher highs going to a peak A, B, C, even a D, but that should take you to just under, right on, or just above the previous high. And then you've got to be careful, especially if you take out the halfway marker, and that makes in the yen, that makes this level right 138.5 is going to be a really important support, and we're at 142.39. Basil Chapman, Dow's up 80, S&P is up 2.24, a little bit of a divergence. I'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
How important is the 200-period exponential moving average? Not important at all until you get close. Look at this. Right here, this is at 2 o'clock on the December the 24th. Hits the 200-period moving average, and that was it. It never touched it again until when? Until a couple of minutes ago. Bam, it hit it got very close. It got very close at about 9 o'clock, bounced, and then came back for the E-mini, S&P E-mini March contract. Bam, it hits it twice, and it pushes up, and now it's right at the 914 period moving average in the 10-minute chart, which has just turned negative, but that could change in a second. I just want to show you how important that is. And the other thing is, within the context of markets, so a question came in, what would constitute a dark news cloud cover other than other than interest rates and the dollar declining, or the dollar rallying? As simple as I can make it, and this is a tool that any of you can use out there. If the S&P futures doesn't matter what the reason is, if they are down, at this point the number has to change. It used to be 22 to 32, but now I think I have to make it almost 38 to 45. If the futures are down, the Dow futures are down about, I'd say 270 to 310, and the market tries to rally and then fails and closes at the low of the day, and it repeats the same thing the next day, then you're in a bear phase. Unless that happens, the sun shines and the market tries to find a good footing. It's just as simple as that. You want a bear phase? Watch those futures. If you just get persistent, and then you have to have a theme that suddenly becomes the negative theme. It could be out there all the time, but if the market says, hey, I'm now listening to that theme and it's important and I don't like it, that's when you're going to get it. So where do you get bear markets? You get them when there is news out there that impacts the market negatively to the point where the futures, the S&P and actually all the futures, are really sharply lower. They try to rally and then close the session lower and then open the next day lower and do it again and then close at the low of the day the next day. That is a bear phase. Unless that happens, most of the time you're going to get buying coming in. Just make it as simple as possible. Now, let's go through this because, so let me just see this. So Jeff wants to know about LMT. LMT is Lockheed Martin. Isn't this interesting? This almost looks like the futures. You know how I draw that? I'll go back to the chart I was just showing you a moment ago. I'll go back to it in a moment, but let me just show you this. This is the higher highs and higher lows in the monthly chart, but look at this. So then let me just, I think this is about where it is. Pulling it across. This is the daily chart. Let me move it. There it is. Okay. You see this pattern? A narrow rectangle can last a lot longer than your patience. So it starts off, it looks like a wide rectangle, but then it turns into a fairly narrow rectangle. So it went to a peak C from the low that was made about 390 back in October. It spirals higher, and then it makes higher highs and higher lows, makes a peak C, but then it doesn't pull back very sharply. Instead, what it does is that underneath it, it makes another peak A. Look, this is your starting point right here. So every single peak needs to be elucidated, counted. So there's your low, and here comes peak A again, another peak A right there, A, another B right there, and another C. And then what happens is, takes out that low, and it goes to a lower low. Here's another peak A and another B. So the more you get of these, the greater the chances are when it suddenly breaks, it breaks to the upside and it tackles that, so you could even have an overlapping wave. But at this particular point, Lockheed Martin trading at 450.88, up 70 cents. And I think you got calls on Lockheed Martin. That's fine. Calls are good. But I would just say to you, you need to get them quite far out because it's just kind of stuck here. And my suspicion is based on the weekly chart, it could stay here for a little while longer. And you said Lockheed Martin, what was the other one? Lockheed Martin, and I know you had two of them. Let me see, calls here for February. Okay, February 500, I don't know about 500. I would have gone to February 455. So I wouldn't get all the, well, you've got that. Let's see what happens. That's a little, to me, that's it's actually asking you, oh, mind you, February, let me see what day it'll be. So if it's February and it's a monthly one, it goes to the 16th. Okay, that's fine. You got, from this moment, yeah, you've got about 7 weeks or so. That's okay. That's fine. There's a chance, but I think the 455 area is going to be really stalling the price, and it's going to be there for a while. I would actually go out a month later. That was the one, and then what? Yeah, I think you had two. So as you said, am I missing something? Yeah, I'm adding LNT. Oh, and RXT. That's Raytheon. Okay, now Raytheon is a little different. Look, Raytheon. Or RTX. You put RXT, it should be RTX, I believe. See, Raytheon's different. This is showing that it wants to go to higher highs. So yeah, you've got another A. You got another B right there. You got a C, and you're actually in already D, getting very close to as 84.38, getting close to the 85.69 200 period exponential moving average. It needs to go a little higher to make that a magnet. And it's in a leg B and a leg very unusual. I've seen a lot of these patterns lately. Very nominal higher highs. Very interesting. But as I say, yeah, right towards the 200 period moving. This is a little bit better. Raytheon, yes. The other one I looked at, which I thought was one of the better ones, was GD. General Dynamics is the best of them all. And I mentioned this when Ernie, was it Ernie that called? Was it Ernie? That called, and we were looking at these, and I believe he had Lockheed Martin. And I said, you know, my favorite here is Raytheon could be a little bit better because they have the Iron Dome, which I think is really very, very important. That has to be worked on even more because it failed in a way because it couldn't handle the number of rockets. But General Dynamics is the one that for some reason, I don't know what they've got, but their chart pattern is way superior. And in fact, they're almost an all-time high right here, 257, might even be an all-time high. That's the better one. Next thing we want to look at, yeah, RTX. Next one we want to look at, TLT. So let me just do this. So this is fascinating to me because rates are coming down. So the bonds are going higher. There's an alternate count right here. Let me just check to see that it hasn't broken to the upside. So that high on the TLT from 4 sessions ago was 99.84, and today's high is 99.80. We haven't quite made it. If it does, it'll be a G/C, and it should go a little higher. So let me just do this before I forget. And I'll be doing my show tomorrow at 8 o'clock till 9 o'clock, recorded, and then I'll be out. And I won't be back until Tuesday. So I'm going to wish everyone just a wonderful 2024, Happy New Year, and a very successful one. And as you know, here at TFNN, we just do our absolute best to make everything as educational as possible. So here we go. TLT, yields are coming down, a very big move up. I'll be back in a moment. We'll talk about yields. Dow's up 58, S&P's down just 32 cents.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So the more times that a 200-period moving average gets hit, the greater the chances are it becomes a magnet, and then it loses its magnetism as the price goes right through. So 49.19 is the 200-period moving average support right now. Watch it closely, and the resistance is very strong at 48.24. All right, let's get back to our story here. So the question came in, what is acting well that you were hoping would work and help the market? And IYT, well, first of all, IYT is the transportation index. They call it the iShares Dow Jones Transportation Average Index Fund. Whew, I mean, come on, who invented that? Anyway, so stalling right now. I had a doji candle about 7 sessions ago. Hasn't broken above it at the 260, give you the exact number right now. There's IYT trading at 265.29, up 26 cents. But that little doji that we're looking at 266.74, it hasn't hit it, but it's gone very close. And that just says to me, the way I'm reading the market, and I don't understand it because I'm not seeing anything that says to me, whoa, be very careful. I am looking at it and saying, you have a right to be a little nervous. You've also added more positions than you usually do. That's always a sign that says, oh, you're getting close to some kind of market top. That's just historically the way I look at it. But the other is that I love when the iShares, the transportation index, actually confirms the rally in the market, and it's done that. All-time high, 282 back in May of 2021. Retests it a couple of months later, fails, makes a cup formation at a peak B, plummets, and now you've got a peak A, peak B, peak C underneath that. And all it needs to do is to go above the high that was made back in, I think it was July. Yes, July of 267.83. 267.83. We were like 2.25 points away from that right now. And that goes to a leg D, and that negates the B. You don't have to get to that B. You can turn down from that D. That's going to be really important. So this is very good action. Fabulous single leg A to the upside in the weekly chart, MACD, everything. There's nothing here that's bad, except when you look closely, you say, wait a minute, why is the on-balance volume stalling? So on the one hand, that's a negative. On the other hand, it says, wait a minute, it still has to go all the way to overbought because it's kind of in the middle of the range at about 48% right now. So it's got a way to go. That's a positive. Or it could be looked at as a negative because it hasn't got there. But I'm looking at it as a potential positive. And the on-balance volume of the daily is really overbought. And if you go to JETS, remember that's the U.S. Airline Index, Global JETS ETF, it's starting to improve. It's getting to the Chapman Wave inside track repellent zone right there. Oh, boy, let me just drag that across. There it is. And there's the pink one. It's right there now as we're talking. So this is going to be very important. Whoops. Got to move the right one. There it is. Okay. So this is at resistance in the monthly chart. The weekly chart is a very nice single leg A, nothing like the transportation index. And here you are with this kind of, I was talking about this before. I was saying it's very, for the last couple of days, there have been so many nominal squeaks to the upside. It just says, this looks to me like distribution, but distribution doesn't mean say, oh my God, now we've got that big smash to the downside. No, you could pull back from 19.18 to 1882 is the 40 cents lower, 50 cents lower would be down at the support level of the 14-period moving average. The 200-period moving average is 18.17. That's just a point away. So you can have a big digestive phase, time, rather than price. And that's really what I'm looking at. So I know that there are a lot of people looking at January, however they do their calculations, looking at January, say, watch out, January. That is the month. It's all over. And the other people are looking at it and saying, no, it's just the start of a fantastic year coming up. I'm kind of in between. I think we are very short-term overbought and that we have to digest this. But my weekly charts are saying, no. As long as those yields keep low, they can even rally now, but as long as they remain in the lower range, and as long as crude oil is not breaking out, and as long as the supply of crude oil is working, and we can actually get natural gas to move to say, hey, finally, we've got some action here. This is good for the economy. I think we're in for some sudden, very sharp pullbacks. And then we go back to buying as normal. That's the way I'm looking at it right now. Very short term, I am getting quite cautious. I'm a little upset, actually, that we've got these added positions. I'm not complaining, really, because they're doing well. But that's not the point. The point is that I also like the fact that we've got a one of them, the most diverse, I call it, can we call it, it's just a group of stocks that are in many areas as a portfolio, very diverse, and it seems to be working right now. So I'm not complaining about that. Now, a couple of things that I wanted to do is, Myrna, very good. I haven't looked at Myrna for today, but I did look at it the other day and it had a big spike to the upside. It's finally, you remember I said about 2 months ago, if you've done your homework and you like it, they do have certain trials and things going on in the pipeline. They had the COVID, it was just unbelievable, and then they got smashed from 497 down to the 50s or 60s. And now look what's happened. It's had over 30% gain, and it's trading at 99.75. It's in play, and it says to me, this is what I'm thinking natural gas chart could look like when it finally goes back. It goes back into the rectangle from whence it left. It just left the station on the downside, and it could get back there. So this is in that whole, I had the webinar. This was not one of those that I spoke about. It's one that I have spoken about before, but I didn't in the webinar. But it fits the category of the laggers. We, in fact, picked up a laggard yesterday morning, and it's up almost 2% in a day and a half. I like the laggards, and I don't know how long they're going to last. That's the whole thing. But as long as they're working, you just raise your stop, let the price tell you. Don't you tell it, because it's not going to listen to you. So far, this is in that category that says, wow, something's going right for the first time, and that makes the whole area, it's at 99, it makes the area between 86 and 80 and 82, not even down at the lowest part of the gap. It makes that really good support on any really bad news coming up. Okay, so that I wanted to do. Now let me do this. I didn't do it yesterday. Apple is just digesting big gains. Everything about this looks like it should be a G. this doji candle right here with a silent Chapman silent doji next to it. Everything about this says that should be a peak. I haven't put that in. It could be a B in the weekly chart, but this one really looks like it's coming down. It's going to come down to the 188 level. It's at 191. Microsoft does the lowercase h that goes to a lowercase m. I drew it in. It's exactly what's happening here. I mean, a more perfect design of a pattern that you're following is you couldn't wish for anything better than this. Look at that. I think it's going to have a tough in this particular phase right now. I think Microsoft's going to have a tough time. Oh, what is going on? That's the rectangle. A tough time breaking into the 380s just until it's completed this digestive phase. Microsoft. What else did you look at? Amazon. We'll look at Amazon as soon as I return.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors. Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So I thought that someone had told me, one of my tennis buddies had told me that they worked for, they consulted with Xerox because it was a transportation. There was a transportation part of it. But here I'm looking and it says, Fujifilm took them over back in 2018 in January, acquired by Fujifilm, and they do printer software. I don't know, but all I can say, what a spectacular move, going from the 12 area to today's 18, 6 points. I would say that a double is not bad. I mean, a 50% gain is not bad. And look at that weekly chart, leg B right at the 200-period moving average. So this goes into the category of IBM, Microsoft. Now you've got Xerox, all those oldies that they morphed into something completely different. That's the way the price looks. We'll see. In the meantime, back to the ranch. We're going to wrap it up here. I'll be back tomorrow at 8 o'clock in the morning to record the show for rebroadcast. And the Dow's up $48. I'm just looking at this. I'm saying I love the fact that areas that didn't work are starting to work really well. And we're rotating, and as long as we can rotate, it says that you've got a good cushion if there is a sudden big pullback. I'll be back. Check out my opening call daily news